Hello fellow traders, welcome to another tutorial video. Thank you very much for your support. Please, when you're subscribing to my channel and you want to hide your ID, it's fine. Just keep in mind that if you want to be a part of the giveaway, please send me an email so I can include you in the list. Again, if you don't want, this is up to you. I respect that. This is your choice. I had the request to do a video for the triangles. It's an essential part in technical analysis. I know that some of you, if you are already trading, you are not taking them into consideration. Nevertheless, many traders do. It's essential to learn how they work. Again, I have said that many times, do not expect to work 100%. These are just signals that you should take in consideration when you are trading. Also, please be patient because this is a new channel, and with your request, I will cover all the parts of technical analysis also. I mean, I have said that also to you. If you want to cover anything more specific, you can send me a message. Now, let's go to the topic. We have three types of triangle. And again, I will doing separately. We will do the wedges, falling and ascending, and the pennants. I will cover them in separate video. I don't want you to look like a bit hindsight. Again, I hope this will work. There are very pros and cons, but let's see first how we can identify and what's behind them. First, we have the symmetrical triangle. This is a very simple to identify. The prices start to circling up and down in the same position, and finally they shoot out. The explanation comes very simple and logic. At this point, the sellers takes the lead, but at this point the buyers. Now the sellers, because anticipate the falling in the price, dive earlier in the price, and that's why we have this distance, let's say. Now the sellers come, but also the buyers are also willing to buy at the same pace. They are also diving earlier, and this creates very strong momentum in the market because the market cannot stay in one position. Most likely the prices will shoot and continue the trend. In this case, the risk reward ratio is huge because we are risking, we are having our risk reward based on this side of the triangle. So actually our target, you understand, that will be at this point. I will also open live markets, so don't worry about that. The ascending triangle. Now what's happened in the case? We have the buyers and the price is hit at a certain point. Now the price rejects, but now the buyers enter again the market. Remember that we are talking about an ascending triangle, so the prices will sky high after this. Now they shoot back down, but again the buyers dive earlier this time in the price, and the prices goes up. Of course, there are many sellers at this point that are willing to sell, but the buyers keep pushing and creating smaller distance from this major line. And now what has happened? The prices breaks out. It's very intense if you want to watch it on live markets. Unfortunately, this is hard. I cannot. I try to do it in 1 minute, but you understand that we will need we need a lot of time until we find a one that it's working. Pretty much we trade them with the same way. Our risk reward ratio will be this side, but don't worry, I will open live markets. And now the last is the descending triangle. Most likely it's similar to the ascending, because I've told you that don't think like rabbits. What's happening in the upside you should also take in consideration in the downside. Don't have some bias when you are trading. Check the ups and check the downs also. You must understand that it's okay if you don't predict the market. You must be okay with losing. This is part of trading. Now the prices shoot down, goes up. We have the buyers. The buyers are weaker in this case. And now again, the sellers try to dive. Now you see that this is the line that will automatically reject because there are some buyers at this point. But again, the sellers now are diving much earlier. And this continue with this spiral that you can see here. And the market gets a very strong momentum while it's trading in this channel, because the channel becomes smaller and smaller. Eventually the prices will break into a direction, most likely to the short side. That's why they are called, based on the name, the symmetrical is a trend continuation, the ascending, the buyers keep pushing and pushing, and they are having less rejection and less, and finally they prevail. And the same for the descending, the sellers keep pushing and pushing this point, like imagining like you are breaking a multiple top, like a double top or a triple top. Eventually, if the prices goes too many times at this point, they will break it. Now let's open some real markets to show you some example and see the pros and the cons. I have found some of them to show you. First I will explain you the concept, and then we will see the pros and the cons. Now, what is the idea? This is the prices shoots up, reject. We find the same area here. They shoot up again. Now they shoot a bit higher, and eventually they break out. Don't wait to see them exactly as they are in theory. You will start to understand the concepts of trading, and this is very hard. It will become with experience. Now our target should be exactly the same height of the triangle, and of course the stop loss will be at around this area. Now this gives us a very huge risk reward ratio, and this is a very good when you are trending triangles. Now I have found also one on GPP. You can understand already the problem, but I will explain later. Now the prices shoots up, goes at this point, reject it again higher than the previous prices, and the buyers finally takes in control. I have one that it's just forming on the UP, on the Euro Yen, and it hasn't formed yet. Now don't jump into conclusion and wait your pattern to complete first, because when you change the time frames, you might think that the pattern is complete, even if it's not. Again, we say that nothing is written in stone. The prices goes down, so we are eventually waiting to take a trade to this direction. Now you might have many false signals, and you might wait the prices to close above or to close below or to enter in a pullback. This is another one on a USD yen. The prices goes down, shoots down, again the buyers take control, goes at this point, shoot at this, and even though it gives the idea that the prices will break down, they almost do the perfect pullback. And even if you enter the trade, see what happened in the future. The prices shoots up. Nothing is written in stone. I have said that many times, so do not expect also to find it here. And the problem which will arise, and you will see it in a couple of minutes, don't worry. You also see the same here. It's an asymmetrical. Most likely the prices will continue to the other side, and our target will be the same as this side of our triangle. I have also find here on the USD CAD, on the Canadian. Now, of course, many will agree that this is the perfect entry, and we will enter to our trade and everything will be fine. But you see that how it rejected and break our lines. Even in the prices shoots at momentarily up, and again they are going down. And now at this point, you can check here, because now the prices have already done and we are in finished market. Someone will start making triangles and again and again, and this is exactly the problem. Take a bit distance from the market, check how choppy it is all the time, and how the market tends to create a triangle by itself. So at any given point of our diagram, we could just use this method and just draw 3 lines. I can guarantee, let's zoom out, you will find triangles almost everywhere. At this point, there is another symmetrical one, and this is the hindsight. This is the problem when you are using the triangles. Of course, they give you a huge risk-reward ratio, and I will jump back to something that it's already happening in live markets, and I always prefer that. I think it's the perfect example. Of course, someone who might tight better lines and do it better and so on. Now you see that this is start forming, so we still have no triangle. But if we change market and you observe the market a bit better, you will see that it is full of this pattern. It's full of these triangles, and this is very easy to identify and take that misconception. Keep in mind, in trading, well, of course, this is not only in trading, this is in general. When you are learning something new, there is the Baader-Meinhof phenomenon. The phenomenon when you are seeing something that you've recently learned, repeat it, and combine that with the physiology of your brain. That when you see this mess of lines and bars and candlesticks, your brain immediately starts to identify known patterns and known shapes. And this is the reason that you might get fooled many times, and you might see that and searching for triangles, but it's not Christmas. Remember, you should see them every time and all the time, at every given point of the market. If you zoom in, if you zoom out, the market is very strange and unpredictable. So take care. I hope you enjoy the video. I hope I cover the triangles. Don't worry about some pennants and I'm ascending or descending wedges. I will cover them in another video, so don't worry about that. Just be patient. Again, thank you very much for watching. I hope I'll see you in the future, and trade safe.